Well, one of the questions I often get from my clients is, I was talking to my neighbor and they told me they didn't get the low rate that you got me when I refinanced. And why is that? Well, there's a few different reasons why different people can get different mortgage interest rates. And the first one is credit score. So across the board in the industry, lower credit scores receive a higher interest rate. Lenders charge more for the additional risk. And so that's one factor. They might have had a lower credit score. Another factor is the down payment. Sometimes that makes a difference as well. And then the third factor is, where did they get the loan? Well, with a mortgage broker, there's not that much competition or competitive edge among mortgage brokers, one from the other, because we all have similar sources. We've got hundreds of lenders to choose from. And so we can shop to get you the best interest rate available for your situation. Now, the banks, the large lenders, often there can be a great disparity between the different lenders. And that's because the lender has what they have to offer, and that's it. And different lenders can possibly have different appetites at different times. You might have one lender who corners the market, decides, you know what, we're going to get all the mortgage loans we can. Let's just lower the interest rate. Or you've got another one that goes, we got plenty of mortgage loans on our books. Let's raise the interest rate a little bit so it kind of slows it down. So when you're working with a direct lender, another direct lender may have a worse or competitively better interest rate. But when you're working with a mortgage broker, as I said, we all have the same sources. We can shop that, get you the best rate available. And again, depending on your credit score, the amount of your down payment, and the property type. Some property types, single family, is one interest rate, where a condominium with less than 25% down has a higher interest rate. And that's because Freddie Mac and Fannie Mae add to the costs for that, because not only do you have to qualify, not only are you the underwriting risk, but the project is as well. So they have to take the financial solvency of the project into consideration when they make that loan. And so with less than 25% down, it's a slightly higher interest rate for a condominium. And so those are pretty much the reasons why one person will get one rate and another person, in a similar area will get another rate. So if you have any questions about the rate that you can get and how that will help you afford more home or pull more equity out of your home, by all means, give me a call. This is James Hecker, 661-714-2145, and I hope you have a fantastic week. Take care.